Hello.
Hey, bud, how's it going?
Hey, I'm doing well. How about yourself?
I'm doing all right. It's been a pretty good day.
That's fantastic. I want to express my gratitude for you coming on and doing this. Um, Literally, I just wanted somebody to talk about some some questions that I've always had about economics, but I never really can find the answers to like online with a Google search.
Yeah, sure. I mean, I'll try my best. Obviously, it's no problem. I like talking about economics, so anytime.
Yeah. I also kind of want to see if like my mindset around economics is kind of in the right place. Like just the way I think about money and resources and stuff like that. That would also be kind of nice to have somebody kind of gauge that actually knows about economics.
Yeah, sure. No problem.
Now, before we start, what do you have any like certified credentialing, or have you? Is this just a thing that you've done for a long time and know a decent amount about?
So, in terms of credentialing, I guess I've got my degrees, and other than that, I don't have any sort of there's 100 other kind of certificates like CPA, CFA, CFP, stuff like that. I haven't done any of those things, but I did graduate school a couple times over, finance and economics, and then I did my undergrad in economics and finance as well.
Okay, all right, cool. So,
I'm sorry, my undergrad was political science and economics, not finance.
Okay, cool. That's way more than I have. Let me let everyone know that you're on right now. Because there were some people that asked in my community to ask some questions.
Yeah, sure. Are you how old are you, and what's your education, and what do you do for work?
So I am almost 30. I am currently studying human services. I am like 2 semesters away from, well, 4 classes away from having and an internship away from having a bachelor's degree in that. I currently work. Go ahead.
Human services. What does that mean?
Counseling and social work. It's kind of
Okay.
entails all
Like
that.
social work.
Yeah.
I got you.
I currently work at a prison at a storeroom, so I can talk ad nauseum about the way that prisoners are treated because I've seen it all firsthand. But yeah, that's pretty much where I'm at. All the politics stuff, all the economic stuff that I do, it's all just a hobby to me. And everything that I know is just from doing my own research.
All right.
So I guess if you're ready to start the questions about economics, we can.
Yeah, let's do it. Economics. Anything else you've got on your mind? Let's get started.
So my first question is America headed towards a communist dystopia, and why is the answer yes?
Why is the answer yes? It's a good question. A lot of people are worried about that kind of thing when they hear about sort of some new government program or some new tax policy. So it seems to be a slippery slope for some people that, the more the government is involved in the economy, the more sort of communist it is, I suppose. But obviously that doesn't make any sense because that's not really what communism is. But, engaging in the question, I would say that I don't think the U.S. is headed for some sort of communist dystopia where the government kind of runs and controls everything, and the private market has no say. Nothing like that. I think that there's just some people in government who want the government to be involved with providing certain services, and that's it. And there's nothing wrong with that, depending on the service, especially. I mean, sometimes the government can provide a service better than the private market, whether that's at a competitive rate or it's just more efficient because it's a singular provider that's accountable more democratically than more on a shareholder basis. Like the post office or some health service the government provides or something like that.
Yeah. So that was a joke question, but you answered it so like eloquently that I didn't want to stop you.
Oh, okay. No worries. You're good.
Okay, how much do you know about the housing market?
I'm not I wasn't I didn't focus heavily on like urban economics or anything like that, but I mean, I know probably more than the average person on the housing market. I worked at a mortgage bank before, so I've got sort of that insider kind of industry information, and I'm looking for a house as well. So all of that combined, pretty decent amount of knowledge.
Okay. Something that I mean, we all know that housing prices have gone up drastically over the years. One thing that I've heard is that a lot of the local policies are tailored around like current homeowners, and their desire for their houses to raise in value because that's how they make their equity. But that's a problem for like anybody else that wants a house. And this seems to be like, now I'm a capitalist, but this seems to be like a good representation of a really big problem that's within capitalism, where the haves and the have-nots interests seem to buck heads a lot. If we try to expand the amount of houses that we have, that's going to cause the value of the current homeowners and this is where I am on this issue. If we drastically expand the amount of houses that we have available, that's going to lower the current value, the value of the houses that are currently on the market. Therefore, lower the equity that people who already own homes have. But if we don't do that, then we're going to be phasing out a large portion of the population from what is essentially a essential item. Like, people have to have houses. Therefore, I've come to the conclusion that having houses as like an investment vehicle probably wasn't the best idea. Do you have any opinions on that?
Well, I don't think speculation in housing is necessarily a bad thing. I think that it's a bad thing on an individual level. If you're 65 years old and 3/4 of your net worth is based on the house that you own, that is not good financial planning, right? Any financial analyst or any sort of CFA kind of guy would not encourage you to primarily build your wealth based on your home residence that you own.
Mm-hmm.
Now, it's different if you're buying investment properties and you have like a diversified portfolio of homes. That's one thing. But that's not really what we're talking about. As an investment vehicle, no. I mean, homes are not a good investment, if only for the fact that it's not diversified. It's very risky, and ultimately, there's better alternatives. I mean, if you're talking about what's a more stable way to build wealth, buying a home or putting your money in like an index fund, well, assuming you have the same money to put one way or another, you're probably going to want to put it towards an index fund if your goal is building wealth. Now, for a guy like me, I said just before, I'm looking to buy a house, right? Well, why would I be looking to buy a house if I just said that the best way to buy, or the best way to build wealth, isn't in a home? Well, I wouldn't be buying a house to build wealth. I like the idea of owning a home for the financial security. Once you pay off your house, you don't have to pay rent anymore. Even if your home decreases in value, guess what? If I got 80% of my rent payments back at the end of my lease, well, that'd be a heck of a lot better than 0%, which is what you get with renting. So there's a type of mindset you can have to always justify owning over renting. And there's also a kind of mindset you can have to justify renting over owning. It just depends on the person. But so that would be my question. That would be my answer, really, is that owning a home as a means to build wealth is often not the most secure way to do it. Now, the second part of the question is, well, how do we implement sort of affordable housing initiatives without totally fucking over those people that did that anyway, right? And I think a good compromise would be having some sort of a land trust that could buy these people out of their homes at a market rate, so and then build on top of them. So like, if you had an area that was like really really starved for affordable housing, and there's a bunch of people sitting on like $3 million homes, if the government were to be able to come in and buy those people's homes and obviously give them $3 million for it. Obviously, this would also be on a voluntary basis, especially when you're talking about single family homes and stuff like that. Then I don't see a problem with that. I think everyone's happy in that regard. If they want to sell their home, they can. For those people that are left behind that don't take the deal, I mean, there's really, there's winners and losers to every policy. And I feel like, if you're on the side of, I have a $3 million home and I want to artificially constrict everyone else from having a home in this area because of how expensive it is, I'm just not sure that's the best thing for broader society. If somebody wants to own a home, then their primary obstacle to owning a home shouldn't be the cost of a home. Their primary sort of obstacle to owning a home should be their credit history, their renting history, their income, right? If they can sustainably hold down a job, I mean, not that they can afford it. But if houses are just, if it's like Boston and the average house is like $900,000 and that's why nobody's buying homes anymore, I mean, I think you have a really, really strong argument for building a bunch of homes and bringing down the cost of housing because everyone else is worse off for it. So I think that's the argument you'd have to make to those people that own these incredibly, incredibly expensive homes. I mean, you go to LA. I mean, I lived in when I was growing up, I lived in a 3-bedroom house. I want to say it was 3 bedrooms, 2 bathrooms, about 2,500 square foot. And it was on maybe 3/4 of an acre. And my grandma, when she retired, she sold that house for, I think, a couple $100,000. That house would literally be worth like $2 million if it was in New York or LA. And it's just a house. I mean, it's not like it changes if it's doesn't go through some force field and fundamentally become worth more or less if it's in New York or LA. It's just because of the incredible problems of building and zoning and supply and demand issues in those cities. So, that's you just have to make a compromise and try to take care of everyone. But ultimately, you've got to build more. And if that means affordable housing becomes more affordable, well, I mean, that was the goal anyway. It seems like people would be better off for it.
Yeah, I mean, I totally agree. I don't really sympathize with the people that are trying to hoard homes so that the price of their assets can go up. But like at the same time, I recognize the economic reality that we can't just let those people lose their assets. Though you do bring up a really great point that even if you get back 80% of your rents, which would be their mortgage payments or the investments in their home, that's still better than nothing. In your solution,
well, hold on. Well, what I'll add to that though, because the people who own the $3 million homes in LA are not losing money on their homes when it goes from being worth $3 million to $2 million. These are people who have bought their homes in like the 1970s for $50,000 and have just been passed down over and over and over again through generations. And there's nothing wrong with passing a home down, but it's just, I feel like the framing gets off because it's like, oh, this custodial worker and his wife who's a nurse are going to lose their $3 million home. Yeah, like, but they probably didn't buy that home, right? And if they did, they bought it 50 years ago when it was actually affordable, right? Okay. I mean, my argument is I want everyone to be able to buy an affordable home when they're a young up and start couple. And their argument is that they should be special and be the only ones who are able to do that. Or everyone else should just have to move 100 miles away from where they were born and where they grew up. I mean, it's a little unfair if you ask me.
Yeah, no, I totally agree. Oh gosh, your solution of the government buying out the houses from underneath them is interesting. I for some reason, being a lefty, I still didn't even think about that. My solution would have been to build houses in a way that that slowly raises the amount of supply of houses within a given area, but not so much so that it's going to like Not so much so to where the current houses in the area's value is going to drop much faster than what inflation would have done anyways, or something like that. It's some convoluted plan like that.
Yeah, and I think something to be clear is that what I just described is an incredibly extreme scenario, right? So there's not really many cities where there's not at least a good amount of undeveloped land that you can develop housing on anyway, and it doesn't really affect anyone because it's undeveloped land anyway, right? Like, it's only in these special cases like San Francisco or New York or LA where there is just fucking nowhere that's affordable in those cities, right? Now, if you live in Phoenix or, Chattanooga or Bismarck or Houston or Atlanta, there's a lot of areas in those cities that are affordable internally. And even if there aren't, there's a lot of areas in those cities that are undeveloped. And so they can have affordable housing built by either the state, the municipality, the federal government, or just developers who are building it in a competitive way because it's, more lax zoning laws. But for cities like LA or San Francisco or New York, it probably would make sense to implement things like I described: a community land trust, cooperative housing incentives, land value taxes, vacancy taxes, maybe banning foreign investment speculation on housing. I mean, those are sorts of combinations of policies that would make sense in these extreme scenarios where it's like just, I mean, like when I was looking for jobs in New York and Boston, that area, and it's like, dude, I don't know how the fuck does anyone live in these cities if they're not because if I were to get a job, if I were to do my job in New York, I would probably be making like $150,000 or $200,000 a year, which would kind of allow me to live my current lifestyle that I live now. But like, how the fuck does how are you like a student in New York? How is someone a waiter in New York? I don't know how do these people live in these cities? It just seems impossible based on how expensive everything is.
Yeah, I agree. I think that like a lot of people focus on New York and LA because they are the most extreme examples, but in my anecdotal experience, it seems like rural areas are pretty damn expensive too. Like a 2-bedroom house will still cost you about $1,000 a year. Not a year, a month, in rent.
Well, sure. I mean, $1,000 a month in rent is, that's fair. I mean, for a lot of people, that would be considered expensive for sure,
especially in rural areas. Like, people in rural areas don't have as many job opportunities unless you're like a retiree that retired from like a nice job and wanted to live a peaceful life. But most people there are like working at the local Walmart or the prison.
Well, kind of. I disagree in part. So my experience living in rural or like sort of quasi-rural places in Texas is that most people don't work in the area because of what you just said. The jobs are shitty and there's not a lot of jobs. Mm-hmm. And so what a lot of people will do is work in the city, or they'll work in like a suburb of the city, and they'll just live in the rural areas because it's cheaper. And the rural area will just be kind of their home base, and the city will be where they work. Now, obviously, you're right. There's a lot of people that both live and work in rural areas, and the prospect of buying, $150,000 home and paying $800 a month for your mortgage and your insurance and your property taxes could be preventatively expensive. But I think, at the end of the day, housing is going to be. I mean, housing is always going to be unaffordable for someone. I mean, even if housing was $300 a month, there's going to be some person who's unable to afford it. I think that you can even, people hold up the example of, I want to say it's Venice in Italy that had like a really, really, really robust social housing program, and housing is incredibly affordable, even though it's, no, I think it's Vienna, not Venice, Austria, I want to say. And even though it's a huge city and even though it's super urbanized, housing is actually relatively affordable in that city because they just had a really, really robust social housing program that they've built. And something like that's totally possible. But even though, I go to Vienna and it's like $500 a month for my apartment or my house or whatever, um, ultimately it's going to, some people are just particularly disadvantaged and they have to be helped with more holistic solutions than just the solutions we talk about with affordable housing. If someone is so poor that they can't afford like $500 or $600 a month in rent, you're probably not going to build enough housing to make housing that cheap organically. And so those people probably need more robust welfare programs to help them out, or education programs as well, sort of outside the scope of the conversation on affordable housing.
Yeah, that makes sense. You mentioned earlier about foreign speculation. Could you go into a little bit more detail about what that is and how that's affecting the housing market?
Yeah, sure. So the narrative goes something like this: that especially when it comes to like Chinese investors, I don't know if that's some sort of a xenophobic thing, or if there's I don't know if there's any empirics to support the idea that Chinese investors are particularly bad in this regard, but the idea is just that foreign investors, like many other investors, like to invest in housing as a part of their portfolio. And obviously, I think that Chinese investors get a bad rap on this because in China, they have this weird system where like you don't really buy land in China. What you do is you buy really long-term leases technically. So you'll buy like a 99-year lease on a house. So for all intents and purposes, I mean, you've bought that house when your lease is 99 years, right? But obviously for wealth building, that's not a great investment because you'd want to be able to pass it to your children, which you can't technically do if it's just a lease, right? And so a lot of foreign investors will invest in like the US housing market or the Canadian housing market because it's free enterprise and you can, right? If you've got the money and the market's asking for a price that you've got, you can buy it, even if you don't want to live in it, even if you don't want to rent it out, even if you don't want to renovate it. And the argument is that there are so many foreign investors doing this in so many major cities as an investment vehicle that it's making all the other houses unaffordable because it's basically taking artificially houses out of the market that could otherwise be rented or could otherwise be sold, and therefore add to the competition of the housing market. So what some cities have done is limited or banned foreign investment, or well, not investment, but foreign speculation in the housing market. I'm not sure if that makes as much sense. I mentioned it as a theoretical possibility. I do think vacancy taxes and land value taxes make almost an inarguable amount of sense. Like, I'm not really sure who would be against the idea of a vacancy tax or a land value tax if you do want affordable housing.
Yeah. Okay, so something else I've thought about is landlords. They'll buy a house and they'll rent it out, and that's all fine and dandy. But oftentimes they'll be like renting it out for more than what like their mortgage is. I would imagine, and that's makes sense because you're making a profit. But like if landlords were to rent out a house for like at their mortgage or maybe even a little less, they would have to put in their own money for their mortgage, but they would still be getting money put into their equity. Has there ever been a time in America? Do you know if there's ever been a time in American history where that's the way it worked, or has it always been like whenever a landlord is renting out a house, it's because they want to make a profit they can spend now and not really worry about, and plus the equity that comes on from paying the mortgage?
I probably couldn't generalize, but I know anecdotally from the people who I know that are involved in real estate and sort of buying and selling homes for like renters income, not flipping homes, just selling the homes, but for renter income. The people who I know that are involved in that, they typically don't take a lot of money out of the account that is paid into. The reason that you're going to see, like, I'm not talking about big real estate developers here, so don't get me wrong. I can talk about them later. But when it comes to like the guy who owns like a 4-bedroom multifamily unit and he sells that, he sells the 4 bedrooms for 4 people and they pay him rent. the reason he's paying, like, the mortgage might be $3,000 and he's charging, $1,000 each, so he makes $1,000 a month, is obviously because you have to pay a maintenance guy, you've got to pay for lawn care services, you have to pay for plumbing, you have to pay for, if you offer like utilities or something, you're paying for that. You have to pay property tax, you have to pay property insurance. So I mean, there's expenses that are built into being a homeowner that you just don't you don't see as a tenant, in general, right? And so that's why they're paying it through their rent, but also you're not necessarily collecting it because you have to pay that money out. The reason I mention that is because the people who I know that are involved in essentially getting real estate is that or buying real estate and renting it out, is that they don't usually take money from that account because they're just trying to build the equity that you described. And once they retire, the plan would either be to sell the homes and and make however a few $1,000,000 or something like that, or to keep the homes and then they would start collecting basically the profit from the homes. They would pay like a property management and then they would just get a margin from the property management firm. Oh, and that's another cost that can come in, is that if you don't actually personally manage your property, you can pay a property management company who would manage it for you. Obviously, they take a cut though, so you have to factor that into your cost. So, I don't really see a big problem with that. In general, I mean, they're doing what we'd want them to do. They're renting the property out and they have to charge a competitive rate, obviously, or nobody would rent it. So nothing really wrong with private landlords. And even big property management firms, there's nothing inherently wrong with them. Now, if they're starting to lobby the city government not to zone additional housing, I mean, that's obviously a problem, but that's more of a question of maybe money in politics or something than the function of a landlord in the market.
Okay. All right. Yeah, I think that I don't think I have anything else on housing. That was all very informative information. The next topic I want to talk about is inflation. The last I checked, and you can correct me if I'm wrong, inflation seems to be about at 4%, maybe slightly above 4% right now, and where it's typically around 2%. Am I right? Are those numbers accurate?
Yeah, that sounds about right. It depends on the inflation you're looking at, but yeah, it's normally around 2-3%. Right now, it's around 4 or 5%.
Have you seen where, or do you have your own opinions on where this is coming from? Is it solely due to the government injecting money into the economy, or is it something about the fact that we haven't really been productive as a country and the government was injecting money into the economy, or like where is this coming from in your opinion, or where have you read anything about this?
Yeah, sure. Yeah. So it's kind of a combination of a lot of things. So it's a combination of a lot of things. So part of it is that the economy is recovering. So businesses plan for basically 2% inflation across the board because that's what they expect inflation to be, right? And so this is why if you work like a corporate job, you're probably going to get at least a couple percent a year in raise because your business is assuming that will be inflation. So they want to keep you around. They want to maintain your standard of living on the salary they originally provided you. At the very least, a lot of the times, obviously, I know that's not a guarantee. It's just it's a general experience of most every person I've spoken with, and myself included. Obviously, you can get more than that as well. But so that's part of it. And so when COVID happened and a significant portion of businesses had to shut down, they were forced to lower their prices to a large extent because nobody was out shopping, nobody was taking trips, nobody was taking flights, and so you've got to lower your prices to be competitive with that. And so that's why during a recession, when consumption is constricted either at an aggregate or sort of a, an industry level, in the case of COVID, you're going to get deflation because there's less money circulating, there's less consumption, so people have to compete to get those dollars a bit more, and so prices will have sort of downward pressure on them to a certain extent. And with COVID, that's what originally caused disinflation, which is just inflation going down. There's still inflation. And inflation was more or less controlled until when? Well, until 2021. Well, what happened in 2021? Well, the economy opened up, right? And so in the first 6 months, I would say the reason there was inflation is you had a combination of businesses opening up and consumers coming back in a big way. Savings rates have been off the charts. The American consumer's in a really good spot. They have a lot of savings. They've been supported for a while. And they're sitting on a ton of money because they haven't had shit to do for the last year and a half. And so, or for the last year at the time that I'm speaking about in this narrative. And so they start spending all their money. All of a sudden, the leverage of the buyers flips, where no longer are these suppliers having to compete for a constricted amount of dollars. Now these providers of dollars are having to compete with a constricted amount of suppliers because so many people want to do so many things. They want to go on trips, they want to buy homes, they want to, do all, go out to eat and all this kind of stuff. And so that's one thing. It's gone from demand pull inflation to like a more supply sided story for inflation. And that is compounded by the fact that a lot of people don't want to do the jobs that they did before the pandemic. And that's for a lot of reasons. I mean, if you talk to anyone who worked in retail or hospitality during the pandemic, it fucking was horrible. It's always horrible working in retail and hospitality. Anybody would agree with that for the most part. But, it's especially magnified when you've got really, 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 really horrible people who feel like it is their job to scream at you for asking them to wear a mask, happening on a daily basis. That's not to mention all the retail workers who've been assaulted, who've been spit on, who've been coughed at because they're trying to enforce these safety standards. It's really hard to be a retail worker nowadays. And, they don't want to fucking do it anymore. And I don't blame them. It sucks being that job. And it probably do need to have better working standards, either in the form of protection from customers who are irate, and perhaps the whole customers always right mindset needs to get shifted a little bit.
It's a fucking awful mentality to have. I cannot stand it, but I work in retail.
I mean, hey, I mean, we're on the same page. I worked in fast food. It's not a mindset that's in every capitalist country. You go to Japan and try and throw a fucking fit in a store, they'll just call the cops on you and throw you out. Like, that shit doesn't happen in Japan.
Right? Japan.
So, and so maybe it's altering the customer's always right mindset to a certain extent. Maybe it's offering better benefits, paid time off, counseling, things like that to employees. Obviously, maybe it's better wages. And so when wages go up, that's a cost of business, and that contributes to inflation to a certain extent because prices might go up to, help pay these wages that are now high. And so basically, all of these supply chain problems in the economy have caused prices to go up because, if suppliers can get if suppliers have like a shitload of people trying to buy their products, and they don't have the ability to give everyone who wants to buy a product of theirs at a profitable margin, the only natural thing to do is to raise prices, because you don't want to tell customers, oh, sorry, we're just out of supply. And on the other hand, if you can charge a higher price, obviously you will, right?
Yeah.
Especially if you're supply constrained. So that's sort of the big narrative, is that the economy is coming from a crash, and it's heating up from a crash really, really, really hard. And at the same time, though, I've always been consistent. Like, we're not going to see 1970s level inflation. We are not experiencing stagflation right now. It's absurd anyone claiming that we're experiencing stagflation right now. I'm not saying it's impossible. We would experience stagflation, but it's not happening right now. I would suspect that 6 months into 2022, I think businesses will, I think it'll more or less be back to normal, and that's also when I'd probably expect the Fed to be making more concerted efforts to rein in inflation to a certain extent.
How does the Fed do that? I know they control interest rates, and that has something to do with it.
Well, there's two. I've made a lot of videos about this on my channel, and there's two main ways that the Federal Reserve can control inflation. One is through interest rates, like you said. So what they do in that is there's an overnight lending market where banks will lend to one another in order to meet capital requirements. So banks have to have a certain amount of cash in their, not cash, I'm sorry. They have to have a certain amount of reserves, which is some combination of like cash and securities and sort of more liquid assets as a proportion of the money that they've given out. And obviously the reason for that is that if people withdraw their money, they need to always be able to withdraw their money. But only a portion of those people are withdrawing their money at any given time. So you only need a portion of that cash that you've sort of divvied out on your balance sheets as actual reserves. And so they will lend to each other overnight to with interest to meet these capital requirements. Hey, I need this much. Okay, 1%, whatever kind of thing. And the Fed will buy and sell securities from these banks in order to control that rate, that overnight lending rate. So if they buy treasuries, well, they're buying money, or they're buying treasuries, so they're giving cash in exchange for treasuries. So more cash is in the market. So cash is easier to come by. So interest rates are going to be lower, right? If they're trying to raise interest rates, they're going to sell treasuries to banks. That's going to have less cash in the market because they're buying a treasury, they're giving up cash. So there's less cash in the market. Cash is harder to come by. Interest rates are going to go up because it's more expensive to basically hold money. And that's the main way. That's what, the federal funds rate, that's how they control it. Technically, it's a market determined rate, but also practically the Fed has incredible control over that rate. The second way is through quantitative easing. And so what the Fed does is, hey, we want to encourage lending. We need to ensure basically everyone has access to credit because that's good for the economy. It's good for investments, good for expansion, it's good for economic growth when people can take risks and get credit and be industrious, be entrepreneurial. And also just take on credit when they need it, right? And pay it back later when they've kind of got the money for it. And so quantitative easing is just basically buying treasuries from banks, buying mortgage-backed securities, buying corporate bonds. And what that does is they buy those securities, they change them with cash, so you're buying them with cash, and they hold these securities. What that does is it increases the value of those securities because these are securities being held out of the market just by the Federal Reserve. So there's less of them to come around. The value of them goes up. You encourage lending that way. Also, you're injecting a shitload of cash into the market. And so you encourage lending that way as well. Because you're buying these things and you're trading them for cash. So now all these banks have all this cash, and they go from there. Now, the way that they would control inflation with quantitative easing, I should say the way that they would control inflation, one is by raising interest rates, but they're unlikely to do that because they've got all of these assets on their balance sheet. They don't need to raise the overnight rate necessarily because what they can do is, I've got $5 trillion worth of U.S. treasuries in my on my balance sheet. I can just start selling them. People will buy them. So I sell those treasuries on the open market. Imagine selling $5 trillion worth of shit. You're selling $5 trillion worth of treasuries. And then all of a sudden you've captured $5 trillion from the market. Right? So dollars are harder to come by, and therefore you'd have disinflation. Prices would come down proportionally. And then you'd have less, inflation, basically. So You only need to do that when inflation gets sort of out of control. So as long as inflation's 2%, you can ultimately do as much spending and quantitative easing as you want. But if it's coming up, then you'd want to start what they call tapering, which is just slowing down your purchases of those assets, or offloading the balance sheet, selling those assets and actually capturing cash from the market and lowering inflation that way.
And these methods, they generally do since we've come up with them as a country, what was it, the 70s when we had the hyperinflation, or the 60s, somewhere around there. Has these methods failed to keep inflation in control since then, or?
Nope. Literally never.
Is there a reason that we should believe that it's possible that they could fail?
A good question. So what would cause quantitative easing or raising interest rates to fail? So there's some people who feel that higher interest rates actually causes inflation. And these people are not correct in general, because that doesn't really make any sense. But the argument sort of goes that, well, if we have sort of a credit-driven economy and you raise interest rates, well, you're raising a cost of doing business. That's just going to flow down to the consumer. It causes higher inflation, right? Now, the problem is that often the papers that are used to justify this first of all, they're not written by MMTers. They're just written by economists, typically. Not that an economist can't be an MMTer, but you get what I'm saying. And oftentimes what these papers will specify is that businesses who rely on short-term credit agreements will often raise their prices in response to higher interest rates, right? The problem is that many businesses don't rely on like a daily interest rate or a monthly interest rate change. You're going to get like your revolving credit agreement. That's probably going to be good for 5 years. You're going to get your corporate bonds, which you pay off in 5 to 10 to 30 years, right? Which, is not susceptible to these sort of, monthly, daily, potentially changes in interest rates on the market. And so that doesn't really hold up generally. And whenever you see an economy struggling with inflation, whether it's developing or not developing, whether it's like a commodity-driven economy or not, whenever they raise interest rates, fucking inflation goes down, right? That's what happened with the U.S. in the 1970s. It's what happened with Britain in the 1970s. It's what happened with Chile in the 1970s. It's what was happening with Argentina until Argentina elected a more sort of leftist populist president. There's nothing wrong with being on the left, obviously. It's just that he was running in part against the sort of interest rate policy of the Argentinian government at the time. And what have you seen in Argentina? Well, you've seen fucking 100% inflation rates because, well, they're not controlling inflation with interest rates anymore. So it's a correlation that's really hard to ignore when it's seemingly worked every single time it's been implemented.
Wait, so you're telling me that it wasn't just socialism that killed Argentina's economy?
Well, indeed, it wasn't just socialism. No, it's monetary policy. I mean, look, like Chile has probably the best governing sort of monetary economy in Latin America. If I had to, and well, I say best, but it's probably just the best that is also the biggest, right? Like maybe Uruguay has a better, monetary authority, but Chile's way bigger than Uruguay, right? So, and Chile has a commodity based economy, obviously heavily reliant on copper, and they don't have inflation more than 3% any given year. Typically, they might be having inflation now because of all of the supply chain problems that I mentioned, but anyway, I mean it's nothing to do with necessarily socialism or being on the left. I mean, it's right now Turkey's having an inflation problem because the head of their central bank thinks that raising interest rates causes inflation. So he doesn't want to raise interest rates. And that's, that's a right-wing government in Turkey. Well, it's call it a conservatively right-wing government in Turkey right now. So it's inflation doesn't care if you're liberal, conservative, leftist, right wing. I mean, it'll just happen if you don't have a strong governing authority over your monetary system.
That is so interesting. Do you have any videos out that talks about that? Like with Argentina and everything.
Monetary?
Well, with Latin America in general.
Country economics? Not really. I haven't done any sort of country specific videos. I was going to do a video on the Allende economy in Chile to sort of look at, his economic policy and see, how did it work out basically before he was overthrown by the military. But outside of that, I haven't been particularly inspired. I wanted to do a video on the economy of Nazi Germany.
Okay.
Obviously, what's always focused on with Nazi Germany is all the social policies, which were absolutely fucking crazy. That doesn't have to be said, obviously, but the economy, oftentimes people will say like, the economic policy of Hitler was good, right? All this infrastructure development and everything. And, when you look into the economic policy of Nazi Germany, it was quite bad for a lot of reasons. Obviously, when women are discouraged from the workforce, that's bad for everyone. You want women to be working. When you're firing like technically skilled employees because they're Jewish, right? This is not an efficient allocation of wages. And that, to me, that's an interesting video to do, but I've done sort of the cursory research on both those videos, but never anything too in depth on that.
Now, you mentioned Nazi Germany kicking women out of the workforce. What effect did that have on the economy? The reason I ask is because when I went into my community and I asked them, I told them that I was talking to this guy that knows his shit when it comes to economics, and if you have any questions, post them here. And I have a lot of right wingers in my community because I try to have a community where both sides can chat without having to feel like you're going to get ostracized, unless you start doing really horrendous things or talking about really horrendous things, then I'll just kick you. But and one of the things that he asked was what effect did the introduction of women to the workforce from the 60s to the 80s have on wages in the U.S.? And I think that a really good way to answer that question would be to maybe give your take on what what happened to wages in the U.S. and give your take on what happened in Germany when they took women out of the workforce.
Well, it's hard to say. I think that oftentimes people will see something like that, right? They'll say, women are now in the workplace. That's 50 or that's 100%, I guess, actually more workers because you're technically doubling the amount of workers. Or same thing with immigrants. People will say that immigrants, you increase the supply of labor, so naturally the price of labor is going to go down. That's just basic economics, right? And that is a layman's analysis. Ultimately, it's the hard question to answer is that to what extent does it lower wages? Sure, but to what extent does it increase demand? And to what extent does that raise wages? When there's twice as many people working, the natural response might be that the price of labor would go down. But there's also a lot more people employed making money and therefore circulating that money into the economy. And that's not to mention that even if you were to take the hardline stance that, experimentally, to best of your knowledge, that no, the introduction of women and immigrants to the workforce lowers wages to some ultimately marginal extent. Well, that's not always the worst thing in the world. Like right now, why are businesses complaining that they're having to raise wages? Well, in part, it's because if you have to raise wages in response to an artificial constriction of workers, whether it be some draconian immigration or sort of family planning policy that keeps immigrants or women out of the workforce respectively, then businesses are going to have less money to invest in the two other components of long-term economic growth. One of them is labor, sure, but the other two are capital and technology. And you need to have those two things to have, ample investment in those two things, I should say, to have a healthy economy long term. And so that's sort of the effect that you'd have on an economy with, like I said, it's sort of an artificially constricted amount of workers, and that's why women in the workplace, and obviously, I'm not talking about open borders, but sort of a more open immigration system that brings in even low skilled immigrants is a good thing for businesses and for average citizens.
Okay. Shoot, Matt, you've given me a couple good segues, but I got questions that revolve around inflation and what we were just talking about. So I guess I'll start with inflation. The austerity politics of the Reagan administration. When I was in my one economics class that I took, my economics teacher told us that it did help with the hyperinflation, but a lot of people suffered underneath it, especially poor people. In your opinion, to what extent does austerity actually help with dealing with inflation?
Well, okay, so the fiscal side of things is relevant, obviously, when it comes to inflation as well. Now, the reality is that Reagan did not decrease government spending, right? So Reagan was not I'm not sure what the justification is to say that Reagan implemented austerity politics.
Okay.
Like, he may have cut some welfare programs, but that doesn't mean the spending wasn't going somewhere, right? Either in the form of lower taxes or, maybe military spending or something. I mean, when the government runs a deficit, the money is going to come from somewhere and it's going to go somewhere, right? And so austerity politics is the idea that you're raising taxes and lowering spending so that your deficit itself shrinks, and therefore sort of fiscally your government is more sustainable. And that is bad for the economy in theory, because what are you doing? Well, you're capturing money out of the economy, and oftentimes from good government services that circulate money. And yeah, you're going to have lower inflation if you do that, but obviously you're constricting consumption, and though that's sort of the material standard that people have been living by. And so people are going to be, it's going to hurt people, right? And so that's where austerity gets its criticism. But I mean, it's correct. I mean, if you cut spending to a point that, which Reagan didn't do, to be fair, but if you did cut spending on like food stamps and unemployment insurance and income supplement programs, you'd have less inflation for sure. But it's just you probably wouldn't, like, how do I put this? We don't have an inflation problem so bad that that's even worth discussing, because doing that kind of thing probably wouldn't have the biggest impact on inflation anyway, right?
Okay. Now, instead of cutting from like food stamps and welfare programs, would areas such as like the government, military contracts and subsidies to oil companies and other corporations, would cutting the spending that goes onto things like that have the same effect, or no?
I don't think so, and I don't think so for a number of reasons. Give me 1 second. Sorry about that.
Right.
I don't think so, and I don't think so for a number of reasons. So, like I said, when money gets cut or when taxes gets raised, it's going to go to somewhere. It's going to come from somewhere, and you just have to think of like the motivations of the people that it's coming from and going to. And if you were to cut something like food stamps, right? This is money that is in your hand one day and is out your hand the next day because you need food, right? You can't just not fucking spend your food stamps because if you're on food stamps, you need them, right? And you need them because it's food, right?
Mm-hmm.
And so that money circulates really well. And so that's why the effect of inflation would probably be greater if you got rid of food stamps than like oil subsidies, because money that's going to oil companies in the form of more lax tax policy, as far as I'm aware, the government doesn't actually like give money to oil companies, but I think that the subsidies come in the form of special tax treatment, which isn't, I'm not saying that's a good thing, but if you were to tax those corporations equitably and sort of capture more money from them than you were otherwise, not necessarily the case that it would result in less inflation than like cutting food stamps, even if it was dollar for dollar, because money that's going to an oil company doesn't circulate as well as it does when it's going to like needy people. And so because a lot of that money is going to go towards like reinvestment into capital goods, a lot of that money is going to, I'm sorry, a lot of that money is going to come from reinvestment in capital goods. A lot of that money might come in the form, of less distributions to shareholders, which doesn't, it doesn't really cause like disinflation because shareholders are mostly higher income anyway, and that's money that's less likely to circulate. It could come in the form of less, sort of more depressed worker wages, but that's like a really inefficient way to raise inflation, to lower inflation anyway, especially considering the tools that you have available at your disposal. Raising interest rates, selling off your balance sheet. These are more efficient and more equitable ways, I would say, of lowering inflation than cutting good government programs like food stamps, WIC, unemployment insurance, stuff like that. I mean, heck, the unemployment insurance, I guess we're going to find out this week, but the unemployment insurance was cut off in September. And I mean, I'd be surprised if the inflation rate of September all of a sudden just shot down to 2%, right? Because it's really this supply chain issue that we're having. It's nothing to do with people quote unquote over consuming. It's not like irresponsible fiscal or monetary policy necessarily. It's like a productive issue in the economy that we're having. And so until those production supply chain issues are resolved, we're probably not going to have either raised rates or less inflation. I mean, you can raise rates and lower inflation, sure, but if your problem is fundamentally a supply chain issue, then raising rates can lower inflation, but that would result in probably a more rocky recovery than you'd otherwise have to have. I mean, essentially, from my perspective, it's more tolerable in an issue where we have supply constraints to deal with slightly higher inflation, but also lower unemployment than it would be to raise interest rates and increase unemployment because of what would probably be a much more rocky recovery and lower inflation, especially if we assume those supply chain issues will be resolved within the next year.
Okay. Earlier you mentioned that a company has to invest in three things in order for long-term growth. And that was wages for their employees, technology, and capital. Was that correct?
Well, they have to invest, labor, capital, and technology.
Yeah. So capital and technology are important. But the wages part, that goes directly to that directly impacts the individual employees' lives, and on a whole, it directly impacts like working Americans' lives. Is there a certain extent that policies around regulating corporations should take that into consideration when deciding how corporations should be investing their money, or should we just let the corporations invest their money any way they see fit, because it would be possibly more efficient, and let the government take care of the people who fall through the cracks? Or is there some other solution that I don't know?
I mean, the answer can be both to a certain extent. I mean, I'm a big advocate for worker board membership, and I think employee stock ownership plans ought to be encouraged in some way by the federal government. Maybe I don't know. I mean, maybe that's giving tax breaks to companies that offer employee stock ownership plans, and maybe worker board membership. I love unionization. I mean, these are all ways to increase the negotiating power on a per firm basis of workers. And so I don't think investing in labor is a bad thing necessarily, of course. It's just a matter of, if you have to invest in labor because the market or some government regulation is artificially forcing you to at uncompetitive rates, that's when you start to have inefficient cuts in the other two parts of long-term growth, capital and technology. I mean, obviously the reality is that capital and technological investment greatly impacts workers' lives, right? It's a good thing when you can work at a company and use their capital in a risk-free way. I don't take the risks of ownership when I go to my job every day and use the office chair and the office they provide me, and the computers and the software and all that stuff. I don't take any ownership risks when I use their capital. My credit rating isn't going to be impacted if my company goes bankrupt, right? I can buy a home just fine if my company went bankrupt. And I, get another job, right? And that's a good thing. That's why fundamentally I'm a capitalist, because that, I think that voluntary interaction is a good thing. Now, it can be coercive, sure, but I think that's where those things that I just mentioned can be important. Now, more broadly, to answer your question, I do think that the government can mostly leave private businesses to their own volition, obviously within sort of environmental and worker safety regulations that you have to have, and use tax policy to right any wrongs in our economy, whether it be based on income or race or sexuality or things like that. I mean, I think that fiscal policy and taxation can solve quite a lot of inequalities in our society. So more or less, I think that that's true, but it's certainly more nuanced if we take a deep dive into it.
Yeah. Okay. So earlier you mentioned immigration, and one talking point that I hear about anti-immigration is that we can't take care of. We've got homeless veterans on the street. We got starving children in America, and we're not taking care of them. We can't take care of them. So why are we going to bring immigrants into this country? Which is a stupid talking point, in my opinion, for a multitude of reasons. But one thing that I like to say, which may not be, which I just kind of want to check the accuracy of, is that I feel like America does have enough money to or enough resources to take care of their own people, and probably then some. We just don't. And it would take like a rethinking of how resources in America are distributed. I'm not saying like socialism, but just a little bit of finessing here or there in order to be able to take care of our own people properly and allow immigrants to come in, and even the poor ones that need help to be able to get it.
Oh, I made a video called "Should Billionaires Exist?" And
I think I watched that.
Essentially, yeah, I mean, I took the position in that video, which was that, look, I don't care if billionaires exist, but I do think that I think it says something about our society when one guy has enough wealth to literally just end homelessness, but doesn't. Now, is that guy like a piece of shit for not doing that? I mean, I think I do think there's something to be said about not donating money to charity when you are truly exorbitantly wealthy. Now, I don't think, I'm not sure if, I mean, like, I don't know. The point is that I think there's something to be said about that regard. The point I made in that video was that fundamentally poverty in this country is a choice. I mean, this country is totally rich enough to take care of everyone who is 1 second, sorry.
Okay.
Sorry about that. Fundamentally, I think there is enough money to take care of almost everyone who's suffering. I mean, people think about the expense of housing veterans and homeless people in general. It's 500,000 homeless people. If you were to build a house for every single one of these homeless people, like $100,000 house, which, I mean, by even the most ritzy standards is a perfectly serviceable house, that would be $50 billion. Well, let's go ahead and double it and say that you're going to provide them, 2 years worth of living expenses and food and maybe some training on the side. I think $100,000 over a 2-year period can take care of a good portion of that. That's $100 billion. Well, now let's say you've got to pay, for some administration and some long-term sustainability studies and stuff like that. Let's throw $25 billion on top of that. Let's just crazily overestimate the cost of housing all these homeless people, and that's what that is, $125 billion. Do we really fucking think that the U.S. federal government couldn't spend $12.5 billion a year over 10 years to solve homelessness? Is that really a fucking thought in anyone's mind that we couldn't make that happen? Really? Really? Because, we just spent $2 trillion on one stimulus bill. We spent $3 trillion under the last administration because the economy shut down. Under Barack Obama, it was a $700 billion bailout. I get that these are during recessions, but I say it's a crisis if there's 500,000 people sleeping on the streets that don't have the mental health services they need, that don't have the food that they need. Obviously, you mentioned veterans specifically. Oh, we have homeless veterans. Why would we let immigrants in? Look, if a veteran is homeless, it ain't because there ain't jobs available for them. That's not why a veteran's homeless. A veteran is homeless because they are mentally ill a lot of the times, and they need mental health services. That's why a lot of people are homeless. Most people don't just voluntarily become homeless. Like, if you're of a right mind, most people would rather work at like McDonald's or Walmart or something than sleep on the streets, right? And so, it's a tragedy when veterans are homeless, and it's a tragedy when their service causes them to have these mental struggles. It is. But immigrants aren't taking the jobs of veterans and then causing them to be homeless. Like, most people in America are not homeless literally because they just cannot work. It's either because they can't find the type of work that they want to do, or I would wager to say that in the case of veterans, it's because they are struggling very deeply with mental health and drug addiction problems that the state needs to step in and solve. Look, the market is perfectly free at any time to help these veterans get off the street. Guess what the market does? Not that, because it's not profitable to get veterans off the streets. And so this is just a limitation of a market-based system. And that's why I'm not an anarchist. I think that the state just needs to come in and either tax to do it or take on a deficit and build the housing and services that these people need. And so when a veteran is homeless, don't look at the Mexican guy working at the Walmart or something like that. I mean, look at the state that's not providing what would ultimately be an incredibly small fraction of the spending that they already do to build the houses and services that these people need. Homeless veterans and hungry children are two problems that the United States has, and it's like two of the most shameful problems that we have, because there's no reason that a single child in this country should be hungry, and there's no reason fiscally that a single veteran in this country should be homeless.
Do you understand the mindset of people that will rail against spending money on helping these people? What is the reason for it? Do you know?
I think it's just a lack of information a lot of the times. I mean, if anyone did the education I have, and it's not because I had some sort of Marxist, leftist education or anything. I mean, fuck the education I have. If anyone just looked at the data that I've seen, it's hard to imagine that they would, it's hard to imagine that they would really have that problem. I think that, it's mostly an information gap. I mean, because the way that I just explained it, if I talk to anyone on the street and I explain that it would cost exorbitantly $12.5 billion a year over 10 years to functionally end homeless, especially for veterans, which would be a small fraction of that percentage. If we just did it for veterans, call it $2 billion a year over 10 years, then I don't see anybody who would fucking disagree with that. I mean, shit, right?
What about politicians that it seems to me, because like the Democrats would be all for this, I feel like. That's like half of the government that would be for it. What's stopping this from happening? Do you know?
I think part of it is probably just disparate priorities. I mean, like, not everyone runs for Congress because they want to solve veteran homelessness. It's not that that doesn't make them a bad person. Maybe their issue is drug addiction more broadly. Maybe their issues is a women's access to women's clinics. Maybe their issue is gay rights. There's 100 million different issues that people might sort of primarily focus on that could cause the attention to that issue not being where it should be. Now, in terms of why doesn't it get, like, is there, like, obviously there's not literally, there's a ton of veterans in Congress, obviously a lot of them, that's a very sensitive issue for them. So why doesn't it get done despite what has to be some interest? I mean, I think that's a good question. I'd have to, if you asked the question to like a Republican or Democratic member of like the Air Force or something who is also in Congress, they would probably talk about the spending that, we just spent $2 trillion and I don't know if, we can really do that in this. And that's probably what they would tell you. I don't really think there's any special interest group that would be against it. So I don't know. That's a good question. I mean, I remember, well, I don't want to talk about that actually, but sometimes initiatives just don't get done because nobody's there really making a big concerted effort for it because there's so many other initiatives to be done. So it's a good question though. I'm not sure. I mean, I'd be interested in that question myself.
Okay. I got another one question from my community that I couldn't really neatly fit in to our conversation. Just basically asking you about UBI, I guess what your opinion on that is, and would it cause hyperinflation, why or why not?
Can you say that again? It may have been you or me, but one of us cut out.
Okay. Yeah, a community member wanted me to ask you about UBI and would it cause hyperinflation, why or why not?
Would a UBI cause hyperinflation? So it kind of depends on how it's funded. If it was funded through a VAT tax like Andrew Yang sort of popularized, I don't really think it would, because that is money that is circulating very well. So you're just taking like really well circulating money and just putting it from one set of hands to another. So I don't imagine it would cause any sort of huge problems with inflation. Now, if you're taking on a deficit, if your like unfunded UBI program goes into effect, that would probably cause a decent amount of inflation because you're injecting $3 trillion into the U.S. economy that's unfunded, right? And so it could cause inflation. It just depends, though. But if you pay for a UBI through a VAT tax or a payroll tax or even like a kind of a higher marginal income tax, I don't really see why that would cause. I don't imagine that would cause a lot of inflation, especially because, I mean, one of the selling points of a UBI is that it's a regular and equitable payment. Everyone gets it, and everyone gets it every month. Eventually, that assumption is just going to be built into the economy, and so that I don't really see why that would, in the long term, cause any sort of inflation.
If the assumption is just built into the economy, wouldn't things just get priced to a point where essentially having $1,000 a month would be the same as having pretty much $0 a month? Maybe that's stupid. I don't know.
No, because dollars are still competitive, even if everyone has a minimum of $1,000 a month, dollars are still competitive, right? People are always going to want more, and so you still have to compete for money at the end of the day. So having $12,000 is never going to be worth nothing. Now, obviously, there's still inflation over time. So $12,000, today is worth more than $12,000, 10 years from now, almost certainly, barring some calamity that happens. But so no, not really. I mean, if you have a UBI that's indexed to inflation, which, I mean, who the fuck would propose a UBI that's not indexed to inflation? There's
government.
no reason to. Well, it's possible. I mean, a strong point, but my counterpoint would be that Social Security is indexed to inflation. I mean,
Okay.
so I mean, if you're going to index Social Security, I mean, I don't see why you wouldn't index, a freaking UBI. But I mean, you could be right. Maybe kind of dumb, but maybe it's possible.
So value-added taxes, I haven't really looked into them too much. I know a bit about like corporate taxes and how they affect the economy, and what the dividend and capital gains taxes are. Value-added taxes, to me as a layman, I feel like value-added taxes would have about the same effects that just like a flat corporate tax would have. But I've heard that it would actually be a good way of raising revenue for the government. Do you have an opinion on that?
Well, it's a really hard tax to avoid. So one of the criticisms of probably the main criticism of something like a wealth tax is that wealth is a very abstract concept, and if the government was tasked with measuring wealth and thus taxing it at a reasonable rate, it would just be really hard to do that in a fair and in an accurate manner. However, something like a capital gains tax is a lot easier because it's sold. Well, what'd you pay for it? Oh, I paid $10 for it. Well, what the fuck did you sell it for? Well, I paid $110 for it. Okay, well, obviously your capital gain is going to be $100, right?
Mm-hmm.
Now, however, based on how you offshore it, how if it's passed down, there's all kinds of ways you might be able to delay paying a capital gains tax. But with a VAT tax, I mean, it's right there. It's in your face, right? You're paying it. When you buy something, well, it's a 15% VAT tax. Well, what's the cost of the goods? $100. Well, your VAT tax is going to be $15. That's just what you pay, right? And there's no way to avoid that necessarily. Not that you can't possibly avoid it, but I mean, it's harder to. And so that's what makes it a very effective way to raise revenue, is that if you need to raise like trillions of dollars for something, a VAT tax would be an effective way to do it. And if that money goes towards progressive government services that disproportionately help lower income people, whether it be a UBI or an NIT or a food stamp program or an affordable housing program or a national health service or something like that, then there's a strong argument for a VAT tax, even though all else equal, it's a regressive form of taxation. Well, if it's incredibly effective at raising revenue and that revenue goes towards very progressive and good government services, then you've got a really strong argument for combining a VAT tax with something else, whatever the program might be.
Would a VAT tax hit lower class people or like the capitalist class people more?
So there's some evidence that a VAT tax is just a sales tax at every stage of production. So if say you're a grocery store or something, well, you're going to pay, how do I put this? So say you're a car manufacturer, right? Say you're a guy buying a car and you're going to pay a VAT tax, and the guy who bought the car from the manufacturer to sell it to you pays a VAT tax, and the guy who made the car as the manufacturer is going to pay a VAT tax on all the steel and electronics and all that stuff. And the guy who made the electronics is going to have paid a VAT tax to import all of the, everyone's paying a VAT tax at every point of the supply chain. And so there's a strong argument that it's true that a majority, 67%, 80%, whatever, some percentage of the fucking VAT tax is going to be pushed to the consumer, to the point that the consumer is going to be paying, a 15% VAT tax, and also the price of that car is going to go up to a certain extent to where those people along that supply chain are saving that money. You know, and that's true. And so in that way, it does hit lower income people. What I would say is that, disproportionately, I should say, what I would say though is that lower income people's income is much more likely to be concerned with necessary goods. So, things like vegetables and meat, things with a less complex supply chain, right? So VAT tax is never going to affect something like corn as much as it's going to affect like a TV,
Okay.
right? And so in that way, a VAT tax doesn't affect lower income people as much as it might wealthier people who have more complex consumption. Also, at the same time, typically when a VAT tax is introduced, there's exemptions on certain necessary products. So you might not charge a VAT tax on like menstrual products or condoms or like food or in Nordic countries, you're exempted from a VAT tax if you buy certain cultural goods. You don't have to pay VAT tax if you buy art in Nordic countries, if I'm not mistaken. And so there's ways to make a VAT tax more equitable at the point of consumption. But the point still stands. Even if you didn't do any of that stuff, even if a VAT tax was just flat across the board for everyone, if that money is going towards good government services that you wouldn't have otherwise because you couldn't pay for them, a VAT tax would still be it would be net positive to a significant degree for lower income people. So you'd still have a good argument for it.
Okay. This idea that anytime that like a corporation gets taxed or someone that's like a capital owner gets taxed, there's an idea that it's just going to get passed on to the consumer, and that seems to be true for a lot of things. Is this an issue, or is this a necessary evil? Is there ways to get around this? What is your opinion on that?
There's not really ways to get around it. It just depends on what you're taxing. Like, I did a video recently on corporate taxes, which found that there's not a lot of research on like how much of corporate taxes are passed to consumers, but one pretty good paper that I found seemed to show that about 30% of corporate taxes are passed to the consumer, right? So if you raise $100 billion worth of corporate tax revenue, that sort of translates into, that burden is sort of 30% transferred to consumers in the form of like inflation, basically on their prices, or like upward pressure on prices. You can make the same argument for obviously a sales tax or a VAT tax. You can make the argument for like property taxes to a certain extent, like, oh, well, if you raise property taxes, you're just going to increase the cost of renting because those people are just passing that money on. It's true to a certain extent with those taxes, sure, but it's also true that not all of that money is passed on. It's not like it's not like a dollar for dollar pass on for those taxes. And the fundamental point again still stands that even if like a minority of those taxes is passed on to consumers, if the money is going towards good government services, that is okay, right? I mean, that's one of the arguments for things like a VAT tax is that, well, fuck, if you're going to use a VAT, if you're going to create a national health service, it kind of maybe makes sense to fund a lot of it with a VAT tax because then everyone's paying into it, right? Everyone's got a stake in the health service, right? If like half of the money comes from a VAT tax or something, instead of just like only rich people. Obviously the second reality of that is that you probably couldn't only tax rich people to pay for some of the more expansive things like a national health service or a UBI, but that's actually a conservative argument for a VAT tax, is that everyone pays into it, and everyone takes out of it, depending on what it funds. So,
yeah. I think that we've gone over pretty much everything that I wanted to talk about. Was there anything you wanted to say or talk about, or?
No, not really. Not really. No, I mean, it was really fun talking to you. Do you have a YouTube channel or anything? Just Twitch, or what do you do?
I'm Liberal Cluck on everything. Twitter, YouTube, Twitch. I stream on both YouTube and Twitch. Video games and politics mostly. And yeah, I'm going to put this video up. Did you need a copy of this video? Did you want to put this up on your channel?
Yeah, I figured I'd just like rip the stream and go from there. But no, I don't. I don't have any questions or anything like that. Obviously, good luck with the rest of your channel. It was fun coming on. Anyone watching, obviously, just if you're interested in economic analysis from someone who's reasonably informed on these issues, I could say go to Econoboi on YouTube. I have a Twitch. You can follow it if you'd like. I'm going to stream eventually, so follow it if you want to be one of those early adopters. I'm on Twitter, like Liberal Cluck said, pretty much Econoboi on everything. So follow me, and just thanks for having me on. It was really fun talking. Yeah, no, I really appreciate you coming on. You're a much bigger name than I am, and I was kind of surprised when you said yes. So I really, really appreciate it. Well, 2,000 subs. I'm not quite a huge channel, but so for me, it's just a hobby. I just like talking about economics. I'm not really super clout oriented or anything like that. So if someone reaches out and says they want to talk economics, I'm pretty much always going to say yes and find the time to do it. So it's no problem at all. All right. Well, I'm sure we'll probably see each other on some panels sometime, and I'll reach out if I ever want to talk again. And if you ever want to talk to me, just let me know. For sure. All right. Have a good rest of your night. All right, you too. Bye-bye.